Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Silver Range Resources Limited. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Mike Power, President, CEO, and Director of Silver Range Resources Limited, which trades on the OTC markets under the symbol SLRRF and on the TSXV under the symbol SNG. Welcome, Mike.
Thank you, Matt, and thank you for this opportunity to make this presentation. I'm speaking to you from Goldfield, Nevada, and the internet's not so good down here, so you're just going to see the slides, but let's take it away. First, a quick word from our lawyers. Now, unless you've been living in a cave for the last 2 months, you're doubtless aware that gold prices have run up very significantly since January. And that's part of a much of a longer trend that's been going on for 18 months. Now, the interesting thing about this current run-up is that the gold price has completely disconnected from the price of the underlying equities of the companies that mine and explore for gold, proxied here by GDXJ and GDX. And to us, this resembles a bit of a coiled spring, this disconnect. And we're quite sure that eventually there's going to be a rebound. Now, what might that rebound look like? Well, very clearly there'll be a reversion to the mean, and prices of equities will rebound to levels more in line with the gold price. And we think that'll be driven by an influx of new institutional and retail investors. These people might have been in the 2020 market, but generally not experienced in the gold market. Now, I'm sure many of the people in the audience here have been in the gold market for many years. And of course, we've been through more bad years than good years, more down years than up years. And we've learned a certain set of rules in those markets. And I'm wondering if these old rules will work. I think there might be 4 ways that we could perhaps not lose, but leave money on the table in a new bear market or in a new bull market rebound. And I'd like to go through each of these just very briefly. I don't think any of us can really pick market turns. We're looking here at the Toronto Venture Exchange as a proxy for the junior market, and here are the 4 biggest turnarounds in the last 25 years. Each of these is characterized by a gradual increase in prices and a change in volume as the market climbs a wall of worry and a new bull market sets in. These turnarounds typically take 3 to 6 months, and you really don't know that you've been through the bottom until the rebound is almost underway. You see it in the rear view mirror. Now, in order to profit from one of these turnarounds and maximize your returns, you really have to be in the market right through the bottom. It's tough, but it's what you got to do. If you come in late, you could be leaving a 2-buy or 3-buy multiple if you join the market after the rebound. So waiting, I think, is possibly a mistake. Producers are always going to let you down. As the all-in sustaining price to produce a price of gold in part reflects inflation. And as everyone here who follows gold producers will note, the all-in sustaining cost seems to be running miraculously with the price of gold and with inflation. And this reflects the cost of goods, services, and labor that's required to produce an ounce of gold. There's another reason why this is happening, and that is gold mining companies have written off billions of tons of ore during the period of low gold prices. And that's sitting there right around their existing mines, ready to come back onto the books. As the gold price goes up, miners are going to start mining this lower grade material, and that too is going to increase the all-in sustaining cost for gold. Both of these factors are going to affect dividends. Finally, as resources are depleted, the majors are going to be wanting to find new assets, and they're going to pay for them with stock. So there's going to be share dilution. I think for all of these 3 reasons, if you're trying to profit in the coming gold boom by betting on the producers, you're not going to be at the head of the pack. Okay, how about advanced projects? Why not bet on one of those companies that's soldiered on through this difficult last few years? They picked up a good project. They drilled it off, done the metallurgy, done the engineering. They're permitted. They've got a feasibility and study in hand. Why not bet on the development companies? Well, I think there's two reasons why this might not be a wise thing to do. First off, you're betting against the Lassonde curve. The real gains to be made on one of these deposits were from the exploration stage when the thing was discovered until it was delineated. By the time it goes into development, it's been de-risked, but a lot of the blue sky is gone. It's not going to double or triple in size. So, in fact, it likely will be a bit of a lull after development decisions are made. So I don't think development companies are a great bet for this one reason. And the other reason is that during the market downturn, risk capital tends to flee from the exploration stage companies and into these more advanced projects because they've been de-risked. And as a result, I think they're relatively overvalued with respect to the junior exploration companies. Now, and that's where I think the action is basically if you want to make the big gains, you've got to bet on an exploration company. Now, most junior exploration companies consist of, have one or two flagship projects, and they make a very compelling value proposition. They go out, develop a drill target, they go to the market, raise some money for drilling, and they promote the possibility of finding a mine on the next big drill program. Do you really know the odds here? It's very well established that the odds of a given drill program actually making a significant discovery are worse than 300 to 1. You don't have to take that from me. This is data from BHP and Kennecott. On the other hand, if you look at the odds that a given mineral property might have a mine on it, in the Southwest US, they're about 80 to 1, and that's based on over 150 years of exploration data. I haven't got time to go into it, but I'd urge you to check out this video here. So the prospect odds are much better than the drill odds. Now, it's much more exciting and fun to bet on a one-show junior, and most juniors in the market, the 2,000 to 3,000 companies that are out there, are in fact this kind of company. There's a much smaller subset of the market, which are the prospect generators, and they bet on the longer prospect odds. But to succeed, the model has to be executed properly. And in our view, here's what's required. You need to acquire a large portfolio of good prospects in order to play those favorable prospect generator odds. They have to be optioned and put in play and drilled. You have to get them in the hands of other companies. That's the prospect generator model, is you let the other guys do the heavy lifting. Now, unfortunately, this takes time. And along the way, you need to protect shareholders and minimize dilution by generating revenues where you can. This is from option payments in cash or shares, and also perhaps by operator fees. The flip side of that, you got to keep the burn rate low. Now, hopefully one of those projects, it turns out to be very significant, and you have to maximize upside for your shareholders. And you do this through retained interests, success fees, royalties. And if a prospect generator finds a really good project, they may actually spin it out themselves, all to the benefit of their shareholders. So this is how we see the prospect generator model working. There have been a few big successes in this field. I'd urge you to look at Globex or Altius in particular. All right, Silver Range. We are a prospect generator. Our focus is high-grade gold and silver. We're looking for targets greater than 5 grams a ton gold or 400 grams a ton silver. And we focus on mineralization and projects that have the potential to host a deposit of this grade. We want to find a high-grade deposit. We work exclusively in the Southwest US right now, and that's where we'll stay. Here's how we work. We generate a lot of projects. We do this through archival research. We go out in the boondocks and sample open ground. We have some private data that we've purchased over the years. We generate a lot of conceptual targets. We stake some. We're continually evaluating our staked portfolio, and then we select some of these and we dress them up for drilling. We do this through geological mapping, a lot of sampling and prospecting, including underground workings. We do geochemistry, and we use various geophysical surveys. At the end stage, we'll do some trenching, and we might even do some very shallow diamond drilling with our own little tiny drills, but we don't do any major drilling. We try and then place our projects with partners who will do the actual drilling and do the heavy lifting. Now, the end product is of this whole process is we might be left with a retained interest in a property, but a fully exercised option will convert to a royalty and a success fee. So you can think of this as a machine. We're continually feeding ideas in and trying to generate royalties and shares and retained interest at the back end. All right, enough talk. Let's see how we rank compared to the other 23 odd prospect generators on the Toronto Venture Exchange and the Toronto Stock Exchange. There's a small subset, as I said, about 23 of them that we know of. Here's how we fit. We have a pretty low market cap relative to our peers. But in terms of actual execution, we think we rank fairly well. We have a large portfolio of projects. As I pointed out earlier, if you're going to play those successful prospect generator odds, you need a large portfolio to make the odds work in your favor. We have a portfolio of 38 projects. Now, those projects are worthless unless we're getting partners to drill them. Otherwise, we're just a land bank. And here's our performance relative to our peers. Now, the thing about this graph is we're showing the various prospect generators in the business as a function of time in the business. We've been in business about 8 years. I took the company down to it was on a one project company in 2016. I took it down to the paint and we turned it into a prospect generator. The prospect generation, as I pointed out earlier, is a bit of a long game. It takes time to generate a network of contacts into which to sell projects. It also helps if you have a win now and then, and that enhances your reputation in the market and your ability to make deals. Nonetheless, we think we're doing a pretty good job for a newcomer, and we concentrate a lot on sales and trying to get our projects in the hands of other people and drilled. We're trying to run a business here. We're trying to generate money for our options, but the flip side of that is we're trying to keep the burn rate as low as possible and put the money in the ground. We think we rank fairly well amongst our peers in the prospect generator business, and we're always trying to run as lean an operation as we can. Nonetheless, as I think everyone here is aware, it takes money to remain a publicly listed company. Okay, let's have a look at our property portfolio in the Southwest US. Now, we have a number of other projects in Northern Canada. I'm not going to discuss them. We're not exploring in Northern Canada. Our current and future work will be concentrated in the Southwest US. So here's our property portfolio, mostly in Nevada, but we're also moving into Arizona. Now, I can't show you all these projects, but I can show you a subset to give you a flavor for what we're up to and the kinds of projects we like to take on. Cambridge Mine is in western Nevada near Yerington. It's a mesothermal or orogenic style project. These have an ability to persist to great depths. I've been down 5,000 feet in some mines in northern Canada, and this style of mineralization is still present. There's still ore down there. It was put into production in 1878 by the first governor of Nevada, and there was intermittent production of a very small scale between then and 1941 when it was shut down by Roosevelt. There's a widespread gold on the property along several trends that cumulatively amount to a couple of kilometers. Very high grade gold. We've sampled up to 80 grams a ton from rock samples, and trench samples have returned up to 14 grams over 3 meters. This project is noted for having high grade visible gold as well, so it's an attractive bonus. Our Shamrock properties in eastern Nevada. It's a carbonate replacement style deposit. Yeah, I'm sure many of you are aware these are very popular in Mexico, where they're noted for being silver and base metal rich. This one's a little unusual because there's a lot of gold in it. We've sampled up to 8 ounces a ton gold, as well as 50 ounces a ton silver and 4% copper from grab samples on this project. It's a relatively new project in our portfolio. You can see that some of the carbonate replacement style mineralization is fairly thick. There's an open stope on the right-hand slide here. And we see potential to develop a very compelling drill target on this property with perhaps some geophysics to define a target. The project was a gold producer between 1875 and 1948. And interestingly, in 1946, it was Nevada's 9th largest gold producer. The whole district in which this is located, the Sacramento district, was written off as a tungsten district by the USGS because they looked at it during the First World War and they forgot about the gold. So this is a bit of an overlooked gem here. Our East Goldfield project adjoins Centerra's Goldfield project just outside my window here. Centerra is hoping to put 3 deposits into production. They're doing a lot of drilling and metallurgical work and trying to advance this project. The Goldfield Main District produced 4 million ounces at 17 grams over between 1902 and 1958. We've got the eastern end of the district. Centerra has the western end. You can see here there's rocks shown in orange, and these are the highly altered volcanic rocks that host the mineralization. And the alteration is equally intense on our property as it is in the Goldfield Main District, where the known or the historic resources are. There's gold on the project, and it's a high sulfidation system, which is characterized generally by very high grades. As pointed out, that was the case in the Goldfield Main. There's numerous workings on the property and a small mine, the Tom Keene mine, which was developed down to 450 feet on 3 levels. It's more of an exploration workings than a big producer, but nonetheless, it shows the potential in this project. Our Tule Canyon project is near Death Valley. It has high-grade gold and silver. The silver is up in the northwest end, and the gold is throughout the project. There's been mining here since before Nevada was a state. Mexican placer miners worked Tule Canyon, followed by Chinese placer miners. In 1893, the first hard rock mineralization was discovered, and there are 4 small mines on the project, including a silver heap leach pad up in the northwest corner of the project. Now, despite the very high grade surface mineralization, we've sampled material here to over 1 ounce a ton and silver to better than 5 kilos a ton. And despite the fact there's been past production here as recently as the 1980s, this has been largely overlooked by the majors because it's in granite and that's not considered favorable. But when you see this much gold around and some past production, you got to think maybe there's something here. We haven't been able to find a drill pad on the property, so we're looking forward to testing it soon. So that's a sample of the kinds of projects we're picking up. As I pointed out earlier in our funnel slide, the end product of our work is retained interest, shares, and royalties. We're generating royalties. Here are 5 royalties we've generated from fully exercised options, and we plan on generating some more. We also generate we generate retained interests, and we also get paid in shares for some of our projects. Here's a couple of projects that have been where we moved to that stage, and they might provide near-term catalysts for Silver Range. We're going to look at 2 shareholdings we have. Silver 47 is run by Gary Thompson, runs Brixton, very successful, capable promoter. He optioned our Michelle project in the Yukon and has pivoted now to a project in Alaska. We got 5.5 million shares. The last raise he did privately was at 75 cents. He's hoping to do an IPO later this year. And when that happens, we hope to be able to monetize some of these shareholdings. Broden Mining is a project generated by the partners in the former Oxygen Capital to restart the Faro mine complex up in the Yukon. In its heyday, Faro was the largest lead zinc mine in the Western world, and it's been dormant since it shut down in about 2000. Broden has secured an agreement with the local First Nation to restart it as a joint venture. We have one of the 5 deposits that's in the portfolio. Broden received an evaluation opinion that this whole project might hit the markets at a valuation between 160 and 250 million shares. We have a 10% carried interest. It's carried through until the property is conveyed. You can do the math. We think the company has pretty strong fundamentals. We've tried to minimize our share issuance. We've issued 40 million shares over the last 8 years that I've been in business. I wish there was less, but I think it's still pretty good compared to many other companies in the business that have blown past us. The company, the public float's about 45%. Insiders have 55%. I personally own about 6% of the company. I've purchased it in the market through private placements and through sweat equity. Here's our stock chart. The tan areas you see here are sort of bear markets in the junior gold explorers. And as you can see, Silver Range tends to do fairly well in the onset of a new bull market. I'm hoping this current bear market will end soon, and perhaps maybe we'll do as well as we have in the past. So that's the story. I think it's safe to bet on sustained improved precious metal prices going forward. We're into a brand new world here. If you're in this to win, I think you need to look at having a prospect generator just to improve your odds. I think the Southwest US is perhaps the best place I've ever worked in for actually finding and developing a new project into production. I've worked across northern Canada and in other jurisdictions. If you agree with all that, you might want to bend on Silver Range. We're on sale and we're financing. So thanks very much. So I'd be happy to answer some questions. I see a few have been posted. One is, are you just pursuing just greenfield projects? How about brownfield opportunities? We're omnivores. If we see a deposit that comes open and we try and watch this very carefully, we'll jump on it and try and move it. So we're not just prospecting for prospecting's sake. What we're trying to do here is, as I said, run this as a business and generate some real returns and gains for our shareholders, and that could be jumping on a brownfields project as well. Capital needs. Well, we need capital, and the reason is we have a lot of millions of dollars in shares. They're illiquid right now. We're waiting on IPOs to happen, and in this market, they're a little longer than we would like. We do run lean, but we do need cash, and some of our option payments have been delayed a little bit as well, pending a market improvement. So we're trying to get through. We would like to. We've opened a raise at 300,000. It'd be nice to get 5. We'll get through no matter what. We've been through a lot of this before, but that's basically our capital requirements for the near term. My sincere hope is that as we go into the next bull market, we'll be able to start monetizing these shares. We'll get more of our options returning, and maybe we'll finally get up on step and not need to do raises in future. My hope is that this company, and then before very long, could be entirely self-sustaining, a profitable business that's just generating wealth for the shareholders. That's what we're working towards. Any color around your significant shareholders, Aurora and Strategic Metals? I was a founder in Aurora Geosciences. I founded Aurora Geosciences with 2 other partners. We merged 2 consulting companies back in 2000. Went on to become very successful. It's the largest geophysical consulting company in northern Canada. Works from Alaska all the way to Hudson's Bay. The reason they have the shares is I was running a prospect generator, and we vended projects into Silver Range, and that prospect generator received shares, and they paid off Aurora for work that Aurora did. That's how they have their shareholdings. Strategic, they've told us they're basically going to stay in and for the long haul as a Strategic Metals. We were spun out of Strategic Metals on the KEG or Silver Range project, and as a result, they have a large shareholding, and I don't think they're going to sell. And they certainly one of their directors, or I'm sorry, the president CEO of Strategic, Doug Eaton's the director of Silver Range, and we have quite a tight relationship. Catalysts for reevaluating Silver Range. Never trust a promoter to tell you his company's undervalued. The market says this is what we're worth. I'll live with that. I do think that if Silver 47 and Broden go public, that'll be one near-term potential catalyst for revaluation. People look and say, wait a minute, they've got all these shares worth a lot of money, and they're liquid, but look at what the company's worth. I hope that happens. Just as an aside, a major reason we're not on the OTCQB is that we have too many financial assets. We look like a mutual fund to the regulators. So we were basically ineligible to list on the OTCQB. I would love to be listing and trading on the QB down in America because I think there are a lot of people down here that would really like to own a piece of this, and it's a little tougher when you're just on the pinks. Who else is on our team? Our technical team is quite strong. I've got, working on as technical advisors, I've got Dick Reed, who's the former chief geologist for Newmont in North America, and a guy who's found more than a couple of mines. Got some experience. Doug Eaton is on our board, who's a very experienced prospect generator. We have a lot of technical people. I'd refer you to the website, to be honest with you. I could spit out bios, and I don't know if it would help. And one question that comes up periodically is what's going to happen with Broden Mining, because that seems to be a major catalyst. It's been an 8-year struggle to get that listed. I think we're getting close to the finish line. The delays that have happened to date the things have been worked through. Basically, what's required is one signature from a downstream First Nation to allow the Ross River to allow the project to proceed. And the two First Nations involved are in big discussions over that, and we hope to see that resolved in the near term. But it seems to be always free beer tomorrow, but I hope that beer's coming soon, because we would really appreciate having some free trading shares in that very significant project. Well, I want to thank all of you for listening in on this. I appreciate the opportunity to show you Silver Range, and I wish you luck investing.